Bond issuance costs. Now, this is the last thing we'll see here. Unamortized bond issue costs are treated as a deferred charge and amortized over the life of the debt. So let's see, we've got cost of issuing the bond. Stark Inc. sold $5 million of a 10-year debenture bonds for $5.5 million on January 1st, year 5, which is also the date of the bonds. So not dealing with any funky, different dates here. Cost of issuing the bonds were $200,000. Well, on that January 1st, year 5, how are we going to account for those bond issue costs? Well, you see right here, unamortized bond issue costs. That is going to be a debit. It's kind of like an expense, right? This is the treatment here. It's going to be a reduction from what you get in your cash. So yes, you should have gotten 5.5 million cash, but you didn't, right? 200,000 were for costs. That's how we account for it here. Premium on bonds payable and bonds payable. At the end of the year, we are going to amortize this expense over the 10 years. We do bond issue expense and reduce the unamortized bond issue costs. Just another process, another thing you might see, a little less common than some of the other things. Premium discounts, really want you to get those down and you'll be good to go. But get familiar, run through this again, right? This whole chapter is not going to make sense probably the first time, and that's fine. Wouldn't make sense for me the first time I was seeing it, and that's totally fine, right? Take a look at it, practice it, answer some questions, watch my videos on the multiple choice questions. This is something that I want you to go into the exam confidently with, and I do believe you will. So let's wrap it up with a nice summary.